Hi everyone, welcome back to the Advanced Mortgage Solutions podcast. Here with your host Joel Sadler and our expert and founder of Advanced Mortgage Solutions, Scott Miller. Right, Scott, so we have had a lot unfold.
We have.
In, I would say, the globe.
Yes.
Over the last 3 weeks or 4 weeks as everyone's been watching. I think one of the big questions that is on a lot of people's minds with debt and mortgage rates, or people looking to refix or adjust their loans, I'd love to get your comments on what do you think is going to happen as people have these decisions coming up, and or looking to buy in that process now. What do they do in terms of interest rates?
Yeah, look, really good questions, and there's a lot of misinformation out there. I think we sort of alluded to that off camera, but there's two different pressures because of the war, really, and the war largely is causing, inflation through oil prices, which don't just affect you, putting how much it costs to put it in your tank, but it's how much it costs to get goods around the world and transport and all sorts of things. So it's drifting through into, normal grocery prices and just everything into life. There's no sort of sight to the end of the war either. Some say, they're in negotiations and it's going to be quite a quick resolution. Others are saying, well, that's just a load of rubbish, and they're sort of still throwing rocks at each other. And, so we don't know where that's going to end. The thing to understand in New Zealand is the official cash rate announcements that the Reserve Bank announce every 6 weeks, they really only affect the floating rate, the 6-month rate, the 1-year rate, the 18-month rate, and maybe a little bit of the 2-year rate. The 3, 4, and 5-year rates are more affected by what happens overseas, because that's the rates that the banks buy in when they're short of cash with local domestic deposits. And so what you find is that those 3, 4, and 5-year rates are much more affected by what happens around the world and the availability of finance, and if there's a scare in that or not. And that's why you're finding that those shorter term rates really haven't done anything. It might be a little 0.1 on the sort of the 18-month and the 2-year rate, but those those longer term rates have gone up by almost 0.5% really from their absolute lows, and that's because it's just costing more to buy that money in from overseas. So look, our advice to our customers are at the moment, if you want to take a punt and you don't mind taking a little bit of a risk, then fix in for 6 months and see where that lands in 6 months' time. Do not go anything longer than 6 months unless you're looking at the 4 or the 5-year rate. And the idea there is to sort of lock in a rate now that's going to get as far through the interest rate increases that we're going to get over the next year or 2 or 3, and then try and ride that interest rate curve down again to the next low in, say, 7 years' time. The limitations around what New Zealand offers is that the 5-year rate is basically the longest rate you can pick, and usually lows to lows on interest rate curves, or peaks to peaks, whichever way you wide and whichever way you track that, is usually about that 7-year term. So we can't pick a rate that takes us from one low all the way through the highs and back out at the new low. But that's where that 5 years is really going to get us as close as possible to the next, interest rate sort of reductions.
Yeah. And so, okay, so I didn't realize that the offshore, say, for example, the US market, that's where they buy, the local guys buy or get loans or source of capital from offshore. A guy I listen to who's quite, is obviously based in the US reckons that in the long term, interest rates he's predicting even down to as low as 0%, 1% in the States, because they have to have massive money printing and quantitative easing to right the economy, and that they choose survival of the system over any inflation, right? And so they just have to bring in these emergency measures and drop interest rates there. Yes. How would that ripple through potentially into New Zealand if they did that in, say, 2026 or early even 2027?
Yeah, well, of course, then you would see the blip that we're seeing at the moment reverse and possibly even go down.
Right.
Like I think we said in a couple of episodes before this particular one, New Zealand's quite a wee way ahead of the rate curve in what we've done in regards to reducing rates through our centralised banking system than most of the rest of the world. And that's why before the events that have recently happened, I was seeing a relatively long-term low interest rate sort of
Mm.
flatlining, if you like, just not really because we could go any lower, because we've got to watch out for our own inflationary pressures, but just because it was so much cheaper to buy rates from overseas. And it would be, quite odd to have a 4 and a 5 year rate less than a 1 year rate. And ultimately, I suppose in some kind of quirk that could actually happen. But
Yeah.
certainly the recent events have sort of put that blip in the market. The world economy is still in the tank. There still has to be quantitative easing and reduction of central bank interest rates and all those sorts of things in most of the countries around the world. It's just that the events sort of come in right in the wrong time, if you like. It won't get around the need for, particularly America, to start printing money and reducing rates. That's an inevitable outcome. It's just when is it going to happen?
Yeah.
And of course, they're going to have to possibly spend some more money or print some more money to keep the little events going that they're going through at the moment. Those
Yeah.
don't come cheap, as you could imagine.
Yeah. So essentially, you're saying that it may not have any significant impact on our local rates. I mean, a bit may roll through, but we're at a pretty low rate or low rates here now. You reckon for New
Yeah,
Zealand? Yeah.
look, if there's
Mm.
reductions in how expensive it is to buy those longer term rates, then the banks, they're not there to gouge. It does seem that way, and they're very good at making money, let's be honest. But
Yeah.
they just have to make a margin on what
Mm.
they're buying it in because they're a business like everything else is a business, and the business has to
Mm.
make a profit. So
Yeah.
you'll find that when those wholesale rates, international wholesale rates drop, you'll probably find those longer term rates in New Zealand will also drop. One bank will blink and they'll all blink. No
Yeah.
one wants to be uncompetitive against their competitors.
Yeah. Yeah.
Yeah.
Awesome. Okay, well, thanks for those tips on that side of it, Scott. You can see why a mortgage advisor or financial advisor is really important, at all times, but particularly in these times for these type of discussions, in terms of people's risk profile and do they fix, especially if they're buying a new home now as well, do they fix for a
Well,
longer
that's a
time or
point
do
that
they?
we haven't really.
Mm,
I mean, largely what we've
mm,
been talking about without
mm,
mentioning it is sort of people that are looking to roll over with existing loans and, what would you
yeah.
do and all that sort of thing. It doesn't really change if you're buying a new home and this is the first time you're setting up your loan. The same rules apply because we're in the same
Mm,
interest rate curve as just someone that's had their home for 10 years and is simply rolling over their loan to a new term.
mm,
But it does at this stage, it hasn't made the assessment rate or the assessment process any harder to get funds. The banks are flush with money. New Zealand's miles away from the events that are happening. Sure, we'll be affected financially, but in the big scheme of things, we're not going to be directly affected in a, physical
yeah.
negative way.
Yeah. Yeah.
So that the banks are business as usual, and there's just
Mm,
no indication like through the GFC that there'll be any tightening of available money or anything like that. There's
mm,
still plenty of it swishing around the world.
mm,
So
mm.
I don't see even this year the way that banks assess new applications is going to be any different than they've done over the last 2 years.
Yeah, and I think
Yeah.
that's a really good point because that's another big question that runs through people's minds. I've been looking at vehicle leasing just recently, and I sort of the first thing that popped into my mind is, all the banks be tightening up their criteria based on offshore events. But from what you're saying, is that that's sort of business as usual for now anyway, which is
Yeah.
yeah,
Look, if anything, I suppose there's a
mm,
wee pause in the market. It's not quite as busy as it was last month. And when I say that, I'm talking, 2 or 3% less busy. So hardly
yeah,
the phones are still ringing and people are still inquiring.
yeah,
So it just means that money's still there for the banks to spend, and
nice.
that's how they make their profits. So
Mm,
don't be put off by thinking things are getting harder or tighter.
yeah.
They're simply not. Yeah.
Yeah. Oh, well, that's good news for home buyers. And then, so we're obviously in March now, end of March. What have you sort of seen over this first quarter, January through March, in terms of the overall market in Christchurch, people getting into homes? What's the sort of
Yeah.
just a quick state of play for the last quarter?
Well, I think
Mm.
again we've mentioned this in previous podcasts. Finally, Christchurch has sort of caught up on what properties are worth for the size of the city compared to the rest of the country. Ever since the earthquakes of 2010 and 11, we've been way behind. You could say that prices of houses in Christchurch compared to other similar cities, or even on comparison per size, we were a cheap place to buy, and finally we've sort of found that parity again with everyone else. And in fact, for the first couple of months this year, we led the charge on capital growth, which we haven't done since, for 16 years. So,
Yeah.
so it was really good to see. That doesn't mean that house prices are going nuts. They're not. They're just going up by sort of 3% here and there.
Mm.
And it's busy.
Yep.
It really is business as usual. There's not a lot of difference going on because of the international events at the moment. I think that's partly because it is so far away, from New Zealand. That's one of those advantages again of us being at the bottom of the world, is that we're just quite removed from, world events in that way.
Yeah, brilliant. Yeah. Awesome. All right, Scott, look, if someone's looking to buy or looking to roll their mortgage over and wants to speak with you, either on a sort of surface level to confirm their thoughts and what they want to do, or on a deep dive like we've kind of done today, how do they get hold of you and book that in?
The website has all of our contact details, both via email to any of our advisors or direct mobile numbers. It also has a lot of calculators and a lot of information around what you're looking to do. Is it buying your first home, your subsequent home, a rental property? All of those sorts of things are covered off on the website, www.advancedmortgagesolutions.co.nz.
Thanks, Scott. We'll see you on the next episode.
Lovely. Thanks, Joel.